How does this affect Doctor Who in the future?
Hello?
Yeah, you're here.
Heard a Doctor Who reference. I wondered if I answered the right.
Does the Brexit affect Doctor Who?
Did I answer the right call? Well, Doctor Who. You mean the things that aren't on anymore?
No, Doctor Who's on.
It's a new Doctor Who, isn't it?
There's always a new Doctor Who.
With Peter Capaldi, this last season was really, really good. I got to give it that.
I always forget that I'm on with geeks.
You're not on with geeks.
You're talking about Doctor Who.
I'm a Doctor Who fan.
Exactly.
I've been a Doctor Who since I used to, when I was 9, 8, 9, 10, I used to stay up because I used to show Doctor Who on WTTW, Channel 11 in Chicago.
Sunday night.
PBS channel. Yeah, it's Sunday night. So I'd be up until like sometimes 2 a.m. in the morning.
Yeah, don't get down on us Whovians.
I don't believe calling you a geek in 2016 is actually an insult anymore.
Nerd is a little bit safer.
Nerd, okay, nerd. The new cool thing for fashion models to say is I'm really actually a total nerd.
Well, now we're running a really elite market nerd podcast.
I don't know that. I'm not on that.
Yes, you are. So
I'm not on that. I'm still your typical high school jock where I'm like nerd, but now I'm not one of the cool ones anymore.
I do agree with that.
It's the nerds that are cool.
Yep. You're not the cool one anymore.
I know. I hate that. You watch Doctor Who, do you realize I got 112 yards in Saturday's game?
The advice provided on this podcast is general advice only. All statements made are considered by the participants to be accurate, but accuracy cannot be guaranteed. It has been prepared without taking into account your objectives, financial situation, or needs. All participants in this podcast may have a financial interest in any or all of the products or securities mentioned. Before acting on this advice, you should consider the appropriateness of the advice, having regard to your own objective, financial situations, and needs. If any private products are detailed on this website, you should obtain a product disclosure statement relating to the products and consider its contents before making any decisions. Where quoted, past performance is not indicative of future results.
Welcome to episode 25 of The Money Path with Bob Iacchino and Mike Arnold, founders of Path Trading Partners. I'm your host, Stafford. Today's What and the Why segment is sponsored by MotiveWave. Go to pathtradingpartners.com and download your 14-day free trial. So let's join Bob and Mike with a casual conversation on the markets. Tally-ho!
What happened last night, Bob?
I don't know what you're talking. Do we even is that even necessary for this show?
It is necessary because some people, you gotta start from the beginning. You can't.
If you read the first sentence of my blog this morning.
Well, who reads your blog?
If you read the first sentence of my blog this morning.
I haven't read your blog.
All right. It essentially says, unless you've been sequestered on jury duty in an O.J. Simpson-like trial of the century, you've already heard that the United Kingdom voted to exit the EU, which was a surprise to the media. I'm not going to lie and say it wasn't a surprise to me. It was a surprise to me, too. But I think that's because I was influenced by the media, But the one thing that I was following the most was the bookies, because the bookies literally on election type stuff, this is going to be one of the first times ever that the betting parlors were wrong. They had Leave winning.
They had Stay.
I'm sorry, they had Stay. They had Stay winning. So it's really funny because you heard the news media just going completely crazy as to how crazy this was. And I just don't understand why it's that crazy. I heard a guy saying that London's no longer going to be a financial center now.
Oh, come on.
It was a financial center before the EU existed.
Yep.
So why wouldn't it be now? They act as if the UK is not, it was one of the larger military powers in the EU, but only because of us. Only because of technology, right? And the stuff we sell them. Not just us, and England's power now, the UK's power comes from its relationship with the US. And is someone telling me that's going to change now? It's not.
Not really.
Jim Grant of Grant's Interest Rate Observer had some of the coolest comments. And he was just like, he goes, we never looked at UK equities. We're going to this morning. He said, because they're on sale. They're at about a 10% discount right now.
Yeah, we had stuff move down big. What was it? before they had the vote count yesterday, what was the pound trading at $1.50? It ran down to $1.32.26. Now it's back to $1.38. So you want to talk about moves?
Yeah, the pound fell over, or the FTSE fell over 8%. Which, if it were to, if the cash would have fell 8%, this was the futures. But if the cash would have fell 8%, about like 8.5% is the third largest move in the FTSE ever. And the futures at one point was down, I think, 8.7%. So it would qualify as the third largest move ever in the FTSE. The pound went to levels we haven't seen since 1984. It essentially tells you traders had it wrong, right?
Right.
I mean, now that you're seeing, as of the conversation we're having now, things are recovering. A lot of things are recovering, and the pound's not recovering as quickly as the stock market is. But it just kind of goes to tell you that most of this was people exiting positions. And then the freak shows who just come in and go, oh, my God, you got to sell this. They don't really know why. It's just because that's what's been told to them, is that you have to sell this.
Well, now I'm going to, it was risk on. Now it's risk off.
You know how that drives me crazy?
It's risk off.
Like,
we're in risk off mode.
Who said that the first time? So obviously Mike's talking tongue in cheek. Stafford, you may not be as familiar with this, but every single time that a TV guy doesn't know what to say, he just looks, and if the market's down, he says, well, clearly this is a risk off environment. And if the market's up, he's like, well, clearly it's a risk on environment.
It's not a Karate Kid reference. Wax on, wax off.
No, it's not. It's so funny. It is the biggest safety net. Yeah, Kenny Bolkari and guys like that who really have nothing to say except to repeat what's going on in the markets. But clearly the market is down today, and they're selling off on the Brexit vote. I don't know if you guys know that, but they're selling off on Britain's Brexit vote. So we're probably going to see a little movement, it's an up and down movement, and the market will settle either up or down, depending on whether it's risk on or risk off.
I have every episode of Jeremy Clarkson's Top Gear going back 9 years, so that's not exactly. That's kind of sporty.
I like Top Gear, actually. I like Top Gear a lot. Speaking of Tesla.
No, we're not even there. We haven't finished with the Brexit yet.
Oh, I'm sorry. Well, you can't finish with the Brexit.
Yeah, we can't.
The Brexit, you cannot finish with the Brexit. It's not going to be, okay, we're done talking about Brexit. What else? That can't happen. That's
we're done. After this episode, we're never talking Brexit again.
No, I mean, this entire episode is Brexit, but Tesla did something really shady. And I'm sorry that I actually did a proper segue.
That wasn't a segue.
Yeah,
what does Top Gear have to do with Tesla? It's not like they're car things.
I'm sorry, we went from a car show to a car stock.
Okay, well, Tesla's
let me do it Mike's way. So my flowers bloomed. Speaking of Tesla.
Yeah, see, that's much better.
It's Mike's way.
Hey, my batteries are running low. Speaking of Tesla, see?
You don't even do one that good, and you know it. You know damn well.
Because I like
segue that good. Yeah, I know, because you're a nerd.
So speaking of cars, supposedly the CEO of Aston Martin and Jaguar said with the Brexit, they may need reorganization.
That's ridiculous.
It's all people are just this fear-mongering crap. That's it's
The Times of London said J.P. Morgan is taking 2,000 workers out of London. J.P. Morgan immediately disputed that.
Yeah,
no, we're not. Why would we do that? Well, here's the biggest effect, in my opinion. There's 2 million people working without work visas in the UK. Mostly in the I shouldn't say mostly in the finance industry, but I bet the finance industry would be a big, big portion of that. So there's 2 million people working that are foreigners working in the UK, and they don't need a work visa. There are 1.3 million UK citizens living and working abroad within the EU. Something's going to happen with that. And if you believe some of the punitive talk out of Germany and France from a few weeks ago, they're going to do something right away. Although a document leaked this morning from Hasenblatt, which is a think tank, that they claim is out of Germany, and I have no verification of this, that says they want to rush to give the UK associative nation status, which is usually what the status they give to countries being considered for the EU. So it's the first step to actually joining the EU as opposed to exiting the EU. So that's the biggest thing that's going to happen right away is what happens with these people that are on work visas. And since, as Mike mentioned in the pre-show, would you say, Mike, it's 2 years according to Article 50?
Well, first off, let's just go through some timelines here, because this is what I mean, everybody's freaking out. Like, the vote just took place and now they're out. All right. First, you have Cameron stepping down. It says it's going to happen in October, and he said he was not going to invoke Article 50. He's going to have his successor put in Article 50. Article 50 is, just so everybody knows, triggering Article 50 is a formal notification of the intention to withdraw. It starts once you file Article 50, it starts a 2-year clock running. So you start a 2-year clock. Once that 2-year clock starts, treaties that govern membership no longer apply after the 2 years. But during the 2 years, you negotiate the terms of the exit and everything else, and it has to be negotiated with Britain's 27 counterparts. And each of those counterparts gets to negotiate and has a veto over the process. It's also subject to ratification by every national parliament, meaning any parliament could mess up something with the process. We're in very uncharted waters, but there's essentially, let's say the successor comes in sometime in October or even the beginning of November, and then that successor goes and says, all right, I'm filing Article 50. You then have 2 years from that time, which really puts it at the end of, near the end of 2018. Well, yeah, really by the end of 2018, it's going to be and this is still a non-binding vote. Somebody else, the parliament could say, I don't think they will, but it's not a binding vote. They don't have to follow this. Article 50 does not have to be ever put in. It was a preference by the people saying we want out. It was a narrow preference, but there's nothing that makes this vote binding. I think the bigger risk is, besides the people working there, it's not like they're going to act like, okay, you can't come in and work in London or in England anymore because we're still 2 years off on all this stuff, and a whole bunch of other things are going to happen and negotiations are going to take place. But what I'm seeing this trigger is, we're already having calls for the Nexit, which is the Dutch EU exit vote. And then we had, and I didn't get this one because people were calling for the Sexit, which is the Scotland vote. But actually, Scotland, when you break down the votes, they actually voted, they tipped like 61% to stay in. So, because they were part of the Brexit vote. But when you break out Scotland, they actually favored to stay in. So I don't know why there'd be a Sexit vote because that doesn't make sense. But then we had the Frexit vote that now some people want the Frexit. So we're having a bunch of these. I think it's putting the whole notification to a lot of these people in the EU who are making essentially trying to run all these countries, and making all these rules that,
in Brussels, right? Isn't that where?
Yeah.
Okay.
Yeah, the same
unelected people in Brussels.
Right, and all these countries a lot of them are saying, whoa, stop with this stuff. Stop. Like, one of the things that, regardless of how this vote turned out, earlier this week, I have it titled EU Madness. They were trying to put in regulations that says robots, if you're going to use robots in your business or your store, whatever, there's some form of robot to help you manufacturing or food prep or whatever. When we've talked about this in past shows where a lot of things are going to go to robotics. Well, robots are really electronic people. And these electronic people, the owners of the robots, have to pay Social Security for them. Oh, which is just another tax. Because the robot doesn't ever need to retire. Like when a robot breaks an end of life cycle, you unplug it and you put it in the scrap heap and you put in another robot. It's not like the robot goes to retirement. So paying Social Security for robots is just another form of tax. It's another form of control. And I think a lot of these people, you're getting this movement where people are sort of getting fed up with some of this stuff. All right, I'm done with my soapbox.
Well, here's what's funny. The I can't say that. Scotland exiting.
Hey, wait, are you talking about robots? What kind of robots are you talking about?
Scotland. We've got a clean rating on this show. Scotland exiting would be Scotland exiting the UK, not the EU.
No, they
had the hang on, let me finish. They had the referendum to exit the UK, which was voted down, and now the talk is about Scotland exiting the UK to be considered for entry into the EU, which goes to your voting point.
That's like,
which goes to your point of how the vote broke down.
Yeah, that's where people are just throwing everything out like.
Yeah, but I'm saying that's what the Scotland talk is. We have to be clear about that, and I know you know that. That's why you brought up the vote differential. That Scotland has already voted to try and leave the United Kingdom, which they're already part of the EU based on their territory status with the United Kingdom, but they want to stay in the EU. So that's the one that I think happens almost immediately. Is a new Scotland referendum is probably going to get announced in a week or so. Because Scotland's going to want to leave the UK and join the EU. And I'm telling you, the EU has fought for years to keep Turkey out. They'll like write a new article to let Scotland in with no checks and balances, just to kind of stick the middle finger up to the UK.
Ireland also, they wanted to stay. So, maybe they're going to be a part of that also.
Yeah, it's possible. Northern Ireland EU, specifically, right? So the French vote will happen. It'll probably get voted down. And there's even talk of a German vote now. This is like dominoes. I mean, it's all rumors, right? But I think the one that happens pretty quickly is France. Scotland happens versus the UK, and France happens versus the euro. But the difference, I think, is that the UK leaving, it's more of a democratic society than France is. Right. So like I'm a fan of the UK leaving because it's sort of this exercise in democracy where France is clearly socialist. And I don't think they can survive without the EU. I mean, obviously, they'll still be a France, but.
Right. That's what some of these countries, like they're talking about Italy. Well, I don't think Italy would want to leave because without Germany backstopping a bunch of stuff and the EU buying, we talked a couple weeks ago about buying essentially Italian junk company bonds. Why would you want to leave if they're essentially propping up your junk bond market? And the same with France. It's like, hey, we'll buy some of your junk too.
By the way, Alexandra Lively, who used to be she was a news bureau chief in Chicago that I'd done some interviews with, just tweeted something that I just think is hysterical. Tweeted it during the podcast. Let me find it. She put a headline of EU says UK must not delay in leaving. And then she linked the BBC story that says that. And then she says, new Taylor Swift BREXIT album coming. And she has a GIF with Taylor Swift going, we are never, ever getting back together. It is hysterical.
That's funny.
I retweeted it. You got to retweet it on Path, Mike. It's absolutely hysterical.
All right.
It just died laughing when I saw that.
That actually provides a good segue. Speaking of Taylor Swift.
Speaking of Tesla.
No, speaking of Taylor Swift, that ties directly into the Fed. We got to talk about how this affects the Fed. There you go. See, I did it perfectly.
I don't know what that means. I don't know what that means.
At some point, Bob, you're just going to go with this. You're just going to go with it.
Well, we could all jump in our TARDIS and try to figure it out.
I still don't know what doctor you were talking about. Doctor who?
Now, with K9, do I have to pay tax on my dog K9?
You might, but is he a K9 or is it a robotic? Now it's a robotic K9.
It's the Tom Baker Dr. K9. Absolutely, yes.
I'm having a Democratic style sit-in on this podcast. Until you stop this lunacy, I'm sitting in.
So the Fed came out this morning. What were they?
There's no rate hikes ever again.
They say they're carefully monitoring developments in the global financial markets. Oh, geez.
By the way, funny, because Yellen had her testimony this week, and some senator, I can't tell you who, but one of the senators was like, are you looking at this particular issue? And I don't remember what it was. I remember thinking at the time, what is the Fed supposed to do about that? It was something about income inequality, but it was more of a conservative bend on it. So I don't remember who the senator was or who the congressman was, but She said, we are looking into that and we'll come back to you with a report. And then the senator started saying, I have 18 testimonies by various Fed chairmen where they told me they're looking into it, and they never do. Do you have a proposal on this? And she's like, we'll come back with a proposal. It just reminds me of the statement they made. We're carefully monitoring. I imagine the Fed governor staring at the S&P right now. That's how they're carefully monitoring.
Yeah, that's what they're doing. It's down. We got to do something. Well,
hang on. It's recovering. Maybe it's okay. No, it's down again.
They're going insane. The Federal Reserve is prepared to provide dollar liquidity through its existing swap lines with central banks. People are treating this like it's the end of the world, and it's not.
It's ridiculous.
Well, now the markets are not expecting a rate hike until 2018. So, on that dot we talked about, those dots at the very bottom that weren't moving?
Yeah. Of all the economic issues the UK faces, Brexit doesn't even rank, in my opinion. It really doesn't.
Again, we talked about it's still a 2-year time for it. People are treating this like they just jumped out today. They're like, oh no, they're gone. What do we do?
I mean, the Dow fell to where it was on Wednesday.
I know.
So?
I know.
If you're looking at an S&P chart, we're in the R zone, or we're at the 8. Actually, the R zone's flat, so it's not technically an R zone. That's a Mike Arnold chart thing, but we're basically going down to the 8-day moving average is where we're at.
Well,
the 8-month.
We're trading where we were on June 16th.
Yeah.
That's what's so amazing. We're trading where we were back on June 16th. It's the 24th today, so that's a little.
Yeah, it's not.
See. 1, 2, 3, 4, 5, 6 days ago, we were trading at the same level.
We didn't even go down to the lows of June.
Overnight we traded through them, but we snapped back. Well, it was limit down.
Well, I'm looking at the cash, not the futures. So.
Yeah, well, at one point the futures were limit down, and then everybody got their head back together and said, "Well, this is just stupid." So, but what else did Yellen say in her speech on Tuesday? Did you listen to that one?
No, I didn't listen to the speech. I listened to a bit of the Q&A.
So
I find those testimonies to be just reasons for senators and congressmen to talk about things they want to talk about that have nothing to do with the Fed. I mean, sometimes you see the Fed chairman sit there with kind of a glassy look going, "What? Why are you asking me about income inequality based on race?
Yeah.
What do you want me to do? Hike rates on white people?" I mean, it's like they talk about what they want to talk about because it's televised.
Yep.
Before it was televised, I'm sure it was, hey, can you guys not raise rates until we get reelected?
Well, those are the sidebar conversations.
Yeah, they used to be the live ones.
Yeah, but now it's all the sidebar conversations. Everything that's said live, although, Yellen said we do have a legal basis to pursue negative rates, which was interesting. But before, let's see, she clarified the central bank has found significant shortcomings to the prospect of negative rates. Well, we've seen what's going on in Europe, so there you go. But so they did investigate, do we have the authority to go negative rates? But we found some shortcomings with it. Yeah. I don't know. Maybe they didn't go negative enough. Who knows at this point? So that's interesting. I just thought that if you're looking into the legality of it, if you weren't considering it at all, if it was a policy decision that was a never policy decision, you wouldn't really be looking into the legality of it. But I think they're
something they're never going to do, right?
Right. Between a rock and a hard place, because let's say they're not hiking anymore, which I would be shocked if they hiked this. I mean, it's off in July. I could not see them doing it in September going into the election. And then the earliest they could do it is December, but we're going to have to see how everything unfolds before then.
Yeah, again, I mean, the Fed has raised rates in election years, but never close to the election.
Right. So we'll have to see. And then we still have to remain to see who gets elected. So, I mean, there's a whole bunch of stuff with that. She also mentioned that the forward price-to-earnings ratio for equities have increased to a level well above their median of the past 3 decades. I was wondering why she was mentioning that, because it was and then she finally noted that the economic growth has been uneven. And the payroll employment gains that were down in April and May. But she's optimistic we will see further improvements in the labor market and the economy more broadly over the next few years.
I want somebody to tell me what
So anything can happen.
Yeah.
Yeah. I want somebody to tell me what part of the UK's value economically to the globe was based off of their membership to the EU. Membership in the EU. What part of their economic value was solely based or majorly based, majorly based, I don't even know what word I'm trying to say, was because they were a member of the EU. This is what I just find insane about this. And this is where, like, you know, last night I remember I'm seeing this and I'm going, this is crazy. It's crazy. They voted to exit. Then I started to see the market moves and I'm like, really, guys? Like, it was just, to me, it was only crazy because it was so far against what everybody was reporting. The market got it so wrong. So, you know, I maintain this is people exiting positions they put on that they thought would develop from a leave vote. You've now got a Fed who, as Mike mentioned, is going to be out until at least December. That's what the markets are saying. But I'm going to say it too. Like I say, that's my opinion. The Fed, July is out. July is completely out. This is not a crisis. This is not a crisis. It's not like, I mean, imagine if California voted to leave the U.S. I wonder if the markets would react. You might sell off some California companies, like the tech stocks might get crushed, right, because of Silicon Valley. Some of the tech companies wouldn't get their subsidies. There you go. California would never leave the U.S., but it's not even as big a deal as that would be.
I'm not speaking from any experience here, but does this come down to markets do not like uncertainty, and this whole BREXIT thing is just the ultimate definition of uncertainty in Europe?
It's 100% what it is. Again, we're down 2.5%, not even 2.25% right now in the S&P. That doesn't even show up on the radar screen in terms of biggest down days. We're not even close. We have 2.5% days when Yellen burps. I mean, it's just the reaction is just silly. But again, it goes to something that, you know, Mike and I teach and talk about a lot, is that the only thing that's normal in the market is uncertainty and surprises. You know, people talk about the market doesn't like uncertainty. This is absolutely the truth. But when is the economic outlook ever certain? Number one. And number two, when do you ever have a time where you can't, as a trader, if you're a trader that lasts for a long time, it's because your entire life is surrounded by the idea that you have to protect against uncertainty. And you have to protect against surprises, because the news that hurts you is not the one that was scheduled by the Bureau of Labor Statistics. The news that hurts you is the news like this, right? The planes flying into buildings, the surprise Brexit vote, the bombs on the trains in Spain. Those are the things that hurt you. So these are the blow up moments for people and for hedge funds when they're thinking, wow, I'm going to make a lot of money off of this, and they don't take risk into consideration. That's the main take home for me of this, is that, you know, there was some, God, I want to make a movie reference right now, but my Alzheimer's is kicking in and I can't remember it.
Well, you know, because we're in risk off, Bob. We're in risk off.
We're in risk.
That's totally.
We're just in risk off.
Here's one of my favorite tweets that just rolled by. The S&P 500 bloody but unbowed. Buy the dip. UBS derivative strategist.
Bloody. 2.25% is bloody.
At least they're going to UK reference with bloody, you know, sort of.
Yep, bloody but unbowed. You know, this is all insane. It's just a bunch of insanity. But 10-year treasuries at overnight were down to below 1.5%. They were 1.49% at one point. They were bloodied but unbowed.
It's hilarious.
I love watching these tweets roll by. This is just, that's the best part. I love watching the Twitter.
This is going to be a really weird reference, but did you guys see No Country for Old Men?
Yep.
You remember when Anton Chigurh flips the quarter with the guy in the gas station? And he goes, "That's your lucky quarter. Don't put it in your pocket." Remember the scene I'm talking about?
No.
He flips a coin to decide if he's going to kill the guy or not. It's like one of these scenes.
Okay, I remember now.
And the guy grabs the quarter and he puts it in his pocket and he goes, "Don't put it in your pocket." And he goes, "Where do you want me to put it?" He goes, "I don't care, anywhere but in your pocket. That's your lucky quarter, where it's going to get mixed up with all the other coins if you put it in your pocket. And then it becomes just a coin," which it is. And it's just like this funny scene where it's like, what is he talking about? That's how I look at these Brexit reactions. Like, bloody but unbowed. What?
Yeah,
it's just going to be another 2.25% down day, which it is.
Who knows? I mean, we're not even to the end of the day yet. We can still buy the dip.
Yeah, we could.
You know, maybe it'll recover.
It's bloodied but unbowed.
You know, speaking of No Country for Old Men, we should talk about Tesla now. That was an oil reference.
You're a knucklehead.
I have not seen that movie because I'm a nerd. No robots or spaceships.
Oil reference.
No robots.
And Tesla
or
doesn't use oil, because it's electric. It sort of made sense.
Where'd you even get oil?
Thought it was an oil.
Oh.
I don't know.
Speaking of oil references, well, let's go to Tesla first. Tesla decided to buy Solar City. Is that right?
They want to acquire Solar City, so then we'll have Tesla City.
Wait, isn't Solar City Elon's company, or isn't?
Yes, and his cousin runs it. His cousin does run it.
I know. It's hilarious.
What?
This is what's nepotism mean? No. So Tesla, Solar City's taking it in the shorts. I mean, they haven't been doing so hot recently. They're one of the worst positioned solar a couple studies came out and said they're one of the worst positions. What's the Solar City stock?
SCTY. It's 2147 right now.
It's rather, that looks like it's trading 2147. They were at highs back in 14 of 88.35. Highs at highs earlier this year, 35. They're trading 21. Tesla, which this is an all stock deal, okay, which didn't they just issue more stock and didn't they raise money and now they're going to use that stock to sort of bail out Solar City, which I think is a bailout. I don't know if it's going to get approved or go through, but here's a couple numbers for you. 3.42 billion and 2.16 billion. Now, the first number, 3.42 billion, is how much has been wiped off Tesla's value since the announcement, and that's prior to today, and it was a little lower. Well, the latter, the 2.16 billion, is Solar City's market cap.
Wow.
You've wiped more off of, because their stock plummeted. It was trading prior to this. It was trading up around 220, 223. Now it's trading 193 as we speak. It was down to a low this week of what was the low? That's the wrong low. 190. So it's just slightly off its lows. But Tesla has lost more in its stock valuation, 3.42 billion, than the entire value, the market cap of Solar City. I don't know. He came out and saying the joining of these two companies would create $1 trillion company, because of all the synergies. Okay. Because now, the people who drive Teslas, they need some way to charge their cars, and the sun is the ultimate resource. So, now we have solar. I'm not buying it.
Did I read somewhere that the shareholders were looking at this and giving them a hard time? And
I'm sure they are.
Yeah.
I mean, I'm sure you read that. Yeah.
I'm going to go on record. I think we're going to see at some point Tesla trading under 100, then possibly under 50. Have you seen their GAAP versus non-GAAP numbers? I mean, they're absurd. This is the kind of absurd accounting that we used to see like in the Enron and WorldCom and everything else days, and now they're trying to do this financial engineering and Solar City deals and everything else. I think this is going to end very poorly. If this does go, I think it's going to end poorly for Tesla shareholders anyways. I'm not talking about the company. I'm talking about the shareholders long term, unless they get their cash flow burn rate is astronomical. Now they want to buy another company that has debt problems and not properly positioned. I don't see it ending well for the stock price.
I think Tesla will get acquired, not soon, but that'll be the end. That'll be the end result. Tesla won't be a standalone company.
I agree with that.
But it's funny because Solar City, one of the things that Solar City has been working on is the aesthetics of solar panels. And hence it's a Musk company, right? An Elon Musk, Apple type of company, right? Where Apple didn't just improve the laptop or the desktop, right? They made it pretty, right? That was the whole thing, is they're equipment is so attractive.
Yeah, after they went through their ugly phase.
Yeah, and you look. I'll tell you what. You look at a Prius, it makes me want to vomit. But you look at like a Tesla, the cars are gorgeous, right? And it's funny because that's one of the things that now Musk, they say that as integrated with Tesla, Solar City's aesthetics program will be accelerated because they'll become part of Tesla's design, right? Their whole design thing. But it's his company. Like, I guess he's not actively involved in it. You know, one of the articles I read didn't even mention that it was Musk's company.
We need like a Tesla cologne called like Elon Musk.
That's funny.
Oh, boy.
You know, it's fun. So listen, in California, there was a study done by one of the energy providers that says that like people will actually bypass solar panels due to aesthetics. So in other words, if they have the kind of roof where 16 panels will make a perfect rectangle, but 19 panels is what's needed to actually save on energy, they'll pass on the 3 extra panels because it's more about aesthetics for them, not about energy. If those 3 extra panels had to be layered in such a way that they didn't look attractive. There's homeowners associations in Colorado, Nebraska, California that have banned solar panels because of the aesthetics. There's method. If it wasn't a company he started, it still doesn't make sense. But there's a conversation that can be had.
What's the name of his rocket company?
SpaceX.
SpaceX.
All right. Once they go to try to acquire SpaceX, I'll know it's all. You know? Once they try to tie in that one, well, there's a synergy because now if you're going to Mars, you might need a Tesla and a battery pack and a solar panel to run your space Tesla rocket.
It's just funny because Musk called the deal a no-brainer. You get one of your companies with a lot of cash just buying one of your companies with none.
It's a no-brainer for him.
Yeah, exactly. And his cousin.
And the other company puts rockets into space with money from the Defense Department.
You know why he's doing this? Because life is a simulation. So what does he care?
Well, once he figures out how to simulate money influx into Tesla and Solar City, then he's won the battle. Maybe the rocket ship, though, is his mate. If this all goes south on him, maybe the rocket ship, maybe he has a SpaceX to escape. Think about it.
Now, I know we don't have this in our notes, but I did see this. I was tracking this a while ago. Volkswagen recently said they are going to give $7,000 per owner in America of their cheating diesel engine cars, which is going to come out to over $100 billion or something.
They're going to send $7,000 checks out?
That's right. I mean, they can't make those cars legal, so they have to, you know, compensate the loss of value of those vehicles because they cheat emissions.
Yeah,
that's
but
really interesting.
That's before the Brexit vote. Now that's all. You know what? This could shake up everything.
Yes, but it's all pre-Brexit.
Yes, that was pre-Brexit. We have to see how that's going to change because the world's changed today. I remember we had some people warning before this vote that if they vote to leave, that could be the end of Western civilization as we know it. That is a direct quote. The end of Western civilization as we know it. Okay. Wow. There we go. So, you know what? Volkswagen's sending out $7,000 checks. They're going to be sending it to who knows because it's the end of Western civilization.
You think Tesla gets sued by the shareholders? If this deal were to go through? Because how does the largest shareholder of one company acquire a company that he's also the largest shareholder of, and they have nothing to do with each other? He does not have solar panel cars working yet.
No, but see, look, the solar
battery stuff
absorbs the sun rays, and then it's stored in a battery. And he makes batteries, and batteries are in Tesla cars. It's a no-brainer. You're not seeing it.
You guys hear the tongue in cheek? The tongue firmly in cheek as he's talking. Your jokes are so dry sometimes that this sounds like you actually mean it.
Was that a Doctor Who reference?
I don't know what you mean. I don't know what you mean. Can we talk about Brexit?
Elon Musk still has goodwill, right? He hasn't really.
I think
this stretches it.
This is like pushing the boundaries of goodwill.
But there are a couple Model 3s on the road, you know, the prototypes, and people are saying they're incredible. So he hasn't burned it yet.
He's burning the cash.
That's. I mean, would you call that goodwill, or would you call that a good car? His goodwill is being burned.
I think he can. I think he's, in terms of what he designs and everything else, and the fact of what he did with Tesla from a technology and an engineering standpoint is wonderful. From a financial standpoint, with a lot of stuff he's touched, it's a disaster standpoint, and his companies do rely heavily on government subsidies and everything else. And if when money in some areas dries up, like what's happening with Solar City, they're getting very creative in their financing. They're getting very creative in how they're going to try to dig themselves out of it, and that's where he's burning his goodwill, and that's his Achilles heel, as I see it.
Sure.
I don't know. I mean, our job is to speak to how it's going to affect the stock, right? So I don't want to speak to the ethics of this particular deal, the morality of this particular deal. It's bad for Tesla shareholders.
Yep.
It really is. It's not bad for future Tesla shareholders who buy the stock at 50 and then Apple acquires it.
Right.
But
That's what I'm saying. I see sometimes I would not touch Tesla shares with a 10-foot pole right now. At some other point, I may, if we have an evaluation, but this is another one I could see going way down, and then it could be a potential takeover candidate, because Tesla cars are not just going to disappear. The company may be acquired, so it may not be standalone, as you said, but I could definitely see that happening. And then going into that would be a great possible time to purchase some shares.
I don't know why crude oil is reacting. I think that's stupid. I mean, it's reacting off the currencies, right?
It's reacting because it was risk off, Bob. And crude, in a risk off environment, people stop driving. And we don't need oil. We don't need oil when it's risk off.
This joke is played. Why is crude reacting? It's like, hang on a second.
You don't, because Tesla's buying Solar City, and you don't also need oil for that either. So,
I mean, the dollar's strengthened quite a bit. It's up 2%, which hits crude. But
yeah, but the dollar's it's still trading at levels we were trading in mid-May. It's people. I was seeing
not the index.
What are you talking?
Well, I'm sorry, it is now, but still, I'm just saying, crude didn't fall much either. I mean, no. I'm not saying that like
it got
the dollar
crushed.
has made a bigger move than anything else. I mean, I'm looking at the crude oil chart. It's I'm just trying to see it's reacting mostly with the dollar. Crude oil's down 4.25%. But
it ran smack dab into its 50 EMA again, which it rallied off of before. Right. Now it's leaving along a nice little tail. And we redrew our path trading trend line, and it tested that nicely.
Mm-hmm.
That was, I see how enthused you are in this crude conversation, which you brought up.
Yeah, I don't know.
The longest pause ever.
So what are the opportunities for investing right now? Because I did hear earlier that is this the great buying opportunity we've all been waiting for, or will this just rebound right away?
I don't think this changes your long-term view of the equities. If you didn't like them, this doesn't make them worse. And if you liked them, yeah, it's a great place to buy it. It's not. Again, we got to like put it in perspective. We're not down that much. I mean, I want to buy crude oil here. I definitely want to buy crude oil here, but we're just not down that much. So it's one of those things. It's gonna go down. People were like, "This is going to be one of the greatest buying opportunities." Down 2%. Isn't such a great buy?
If that's the greatest buying opportunity ever.
Exactly.
I'll wait till it's down like 20% or something.
Thank you.
You know what? 2% move is not. Although, look, we've been talking about the transports for a few weeks now, and this move down has really, the transports, the S&P's bounced, the Dow Industrials have bounced. The transports are very, 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 very weak. We're still in this double pattern, which is, we're down at 74.36 right now in the transports. We move our stop down when we hit 73.70. So we're closing in on the area that this pattern is going to keep unfolding and possibly move our stop down. So that's interesting.
I'm sorry. I'm just like, looking at some of the moves and some of the comebacks on the moves, like the euro is rallying back. The sterling is the only one that really hasn't had a substantial rally. You're looking at stocks like Facebook, right? On Facebook, I don't love the Facebook chart right now because it's below all of its moving averages, dropped down below everything, and they're like the 50s crossed over the 8 and the 21. But Facebook, on its lows was down close to like 110. Where was it on the first when it first opened up?
The lows were 111.
Yeah, 111 exactly, and now it's up to 113.13. And this was just a complete buy the dip scenario. This is one of those classic things where Mike and I talk about all the time. You do your own analysis, and you do not let noise and the media sway you into what's going to happen. I mean, if you heard people talk, Christine Lagarde a while back, she's the chief of the IMF, said that I have a document here with 100 different economists all agreeing that this would be a complete crisis for the market if Britain left the EU. And she said, you don't get this kind of consensus unless it's absolutely right. And I thought that was just one of the most irresponsible statements I've ever heard, ever. Again, as Mike pointed out, 2 years for this to actually happen. 2 years.
That's why, I bought the French market this morning, the CAC 40. Because you know why? Because I was a bit hungry and I bought a French dip.
Where'd you find a French dip this morning? That's what you got to tell me.
What do you mean, where'd I find it?
Where'd you find it? Don't buy Coca-Cola Europe, because apparently if you leave the EU, you don't like Coca-Cola anymore.
Is that a headline too?
I don't know. Their stock is getting crushed.
Really?
Yeah, Devon Energy looks good to me. I like Devon Energy a lot. I've liked it for a while. It's made a really big move. It's symbol's DBN. And Devon Energy is one of those. We talked about this in a really early podcast about how if you wanted to play the rebound in oil in stocks, you didn't want to be in stocks like Exxon or some of the bigger ones. You wanted to be in some of the smaller ones that had capital, like Devon Energy and Sanchez Energy would be a couple of the ones. And that's if you're not actually going to play the actual oil, the actual commodity.
I cannot buy a company called Sanchez. You know what?
Because they have dirty energy, right?
Yes.
It's dirty energy. It's not clean.
Right.
I think they did that on purpose. I don't think there's anyone named Sanchez at the company.
I just can't invest in a company called Sanchez.
That's
the oil field. There's just you're opening yourself up for too many jokes.
Today's edition of The What and the Why is brought to you by Motive Wave Software. Motive Wave Software is a well-established developer of easy-to-use, full-featured charting, analysis, and trading software built for the individual trader. Motive Wave offers the best charting tools used by the pros, such as Elliott Wave, Fibonacci, Gartley, Gann, and ratio analysis, but it's presented in a very easy-to-use way. Motive Wave has a product to fit any budget and any trading style, and one of the very best features, it's available on Windows and Mac. So go to pathtradingpartners.com right now to get your 14-day free trial, and then visit them at motivewave.com.
My what is... You see how enthusiastic that was? My what? No,
very.
People are insane. That's my what. There's these overreactions. We'll have to see. Again, we don't trade off of this kind of stuff. We have our patterns. We have our setups. This is when I watch the news and like I joke about the Twitter feed and everything else just for the humor content. I do not trade off this stuff. I wait for the patterns, the setups. I don't just go buy the dip because, it's going to snap back. There's got to be a reason behind doing it. There's got to be a chart formation. There's got to be something. The panic in these markets from overnight was just overblown and absurd. We're going to have to see how this plays out. My what is not really a trading symbol or anything else this week. It's that you don't listen to all this crap that's going on and let it influence and make snap decisions. You trade based off your setups, off your stop losses. Yes, if something goes below a stop loss level and that was your plan, you exit it. If something forms a buy setup, you buy it and put your risk in place and you manage the trade. But these kind of overblown media reactions, like the end of Western civilization, is just a bunch of crap. And is not a reason to take a trade either way. Soapbox done.
My why is essentially the same thing, to be honest. It really is. I mean, look, again, Mike mentioned that we trade price patterns and price action and things like that. And on moves like this, whenever there were days like this, Mike and I trade. We don't trade the same money, but we trade together. Both of us just kind of go, okay, no trades today, because there's not going to be any patterns when you have these big moves. So Mike not having a technical what is completely normal after something like this. I'm reading a tweet right now that says, with a single vote, England just screwed us all. That's the headline. England just screwed us all. They voted to make their own decisions, and whatever harm comes to the economy or whatever benefit comes to the economy belongs to them, and that's the way it's supposed to be. They did nothing to anyone else. They did nothing to anyone else by voting like this. Morgan Stanley's already said not moving people out. Goldman Sachs already said committed to our UK presence. One of the things I heard this morning was that it's going to hurt investment in the UK. Okay, if the property value of the UK falls, right? You will see wealthy foreigners come in and buy stuff up like crazy and support it. Places like London, Tokyo, Dubai, Manhattan, the prices don't go down there for any prolonged period of time. London's going to remain a financial center. All of this talk was, and I don't ever really talk like this on the podcast, this was a fear campaign by the Remain people. And 90% of what they say is going to happen isn't. It just isn't going to happen. This is not that big of a deal. The EU isn't even a full economic integration. It's mostly about immigration for this member state. That's what this is really about. It's not about economic. They did not have the economic autonomy they would like, but the biggest thing that this is about immigration. They want to be able to control who comes in their own borders. And whether you agree with that or not, a country has a right to do that, and the people have a right to vote on it, and they did. So from our job as markets, right, everything that you wanted to buy U.S.-based is now on sale. Everything in the European Union that you wanted to buy and everything in the U.K. that you wanted to buy, be careful. But those are probably on sale as well. They'll get this worked out. It's going to take 2 years to work it out. So all this fear stuff is crap. Just like
it's going to take over 2 years because they haven't even invoked that Rule 50 yet. So until they invoke that, it doesn't even start the clock ticking.
Because the EU has the ability to throw them out, which is what they've been threatening they were going to do.
I don't.
That's what they've been threatening they were going to do. Yes. All I'm saying is the way this will work out, we'll know how this is going to work out within 2 years, and then it'll probably be years after that before it ever happens.
Right, and Cameron said, before if this vote was going to go through, he'd invoke it instantly. Now he said
he resigned.
But he said, I'm resigning, but he's not stepping down till October, and he's not going to invoke it instantly. He's going to let the successor do it. So, see, it's all just it's a bunch of fear mongering. But final headline, I've got to get this in. Mm-hmm. July may be back on the table at the Fed. What's it for? For a rate cut.
Unbelievable.
Now
so we in the U.S. we've got easy money for a while. That really is what the why should be. We've got continued easy money in the U.S. So equities, when they get over this, are probably going up.
Now here's the probabilities. I'm looking at the latest probabilities of a hike and a cut. Probability of a hike for July, 0. September, 0. November, 0, which they wouldn't hike in November. That's like 2 days before the election or something. December probability of a hike is now at 10.2, and in February of 2017 is 11.7. Now, probability of a cut in July, 10%. In September, 15%. In November, 15%. So there's higher probabilities now that there's going to be cuts than there are that they're going to raise the rates in December.
So to use a British term, I guess we have taken the mickey out of the Brexit.
Are you taking the piss?
Yeah, that's what everyone else is doing.
That's my favorite, like, street Cockney British phrase. Don't take the piss. Are you taking the piss? All right, well, I think that's enough for this week, and I'm announcing a referendum for a Bobzit. A Bobzit from the Nerd podcast that I'm involved in.
What?
It's a referendum.
Yeah,
you guys are apparently members of my world.
I vote stay. I vote stay.
Voting whether I stay. I just made you guys part of my country. You guys are voting.
All right, I know how I'm voting. Fine, then I'm just going to go eat that French dip I bought earlier.
Talk to you guys next week.